Welcome to the ICAEW Insights podcast.
Hello and welcome to the ICAEW Insights podcast, where we analyse the latest news from the world of accountancy, business and finance. I'm your host Tom Herbert, and in this episode we ask Small Business Minister Paul Scully how the government intends to help small businesses hit hard by the pandemic. We take a look at the newly announced International Sustainability Standards Board, and we examine why there have been delays for self-assessment registration at HMRC and what the tax authority hopes to do about it. Now, the pandemic has of course hit businesses of all sizes across almost all sectors. However, according to many analysts, including no less a source than the Bank of England, the COVID-19 shock has had a bigger impact on small businesses, with many suffering from reduced cash flows, fewer external funding options and a greater proportion operating in vulnerable sectors. While fiscal policy supported many firms through the pandemic, a rise in running costs and the tapering off of a variety of help schemes means that for some of the UK's 5.5 million small businesses, the future remains uncertain. Earlier this week, I paid a visit to Whitehall to see Small Business Minister Paul Scully, who outlined how the government intends to help small businesses recover from the impact of the pandemic and hopefully prosper in the future. And I started by asking, compared to their larger counterparts, what are some of the distinct challenges small businesses are facing as we move into a new phase of the pandemic?
Well, one of the things, I used to run small businesses before I was elected, and one of the advantages is that they're really agile, very nimble. One of the disadvantages in many ways is that small business owners tend to work for their business rather than having the capacity to work on their business. So it's really being aware of what's coming down the line. It's having the resilience and the capacity to cope with issues like staff shortages, goods shortages. Some of the goods shortages are a global situation, and making sure that they can see what is the latest happening with the trade and cooperation agreement with the EU and these kind of issues.
Yeah, and I guess a lot of people are sort of already, having been through over a year and a half of it, they're already sort of stressed to capacity, tired in a lot of cases, and just sort of perhaps looking to that medium to long term horizon is a challenge in itself.
Indeed, absolutely, and I think this is where accountants are really well placed to act as intermediaries, not just to do a tax return, do an audit, doing all those that basic first level stuff, but really add extra value to a business's growth and resilience by having that sort of horizon scanning. Really on behalf of small businesses and sharing their knowledge.
Obviously, I mentioned the various government schemes, things like furlough or the self-employed scheme and the various loans and things. But going forwards into the future, what's the government putting in place to help small businesses rise to these future challenges?
So there's a number of things. So we've obviously, as you say, had the Sybil's loans, the bounce back loans and the like, and they're moving now into the recovery loan schemes that businesses are able to access. The startup loan schemes are still there for new businesses as well, through the British Business Bank, who's done amazing work with something like 80 or 90,000 businesses benefiting from those loans. We're trying to also break through some of the barriers that people have to access to finance, especially female entrepreneurs, businesses led by ethnic minority members of the community, younger people, disabled people, who tend to have those the similar barriers, but the answers to those barriers are slightly different. And some of them we want to tackle through the Help to Grow schemes, the Help to Grow digital scheme, which enables businesses to either set up maybe a CRM system, a customer relationship management system, or an account system to make it easier for them to trade. And so we're trying to get 100,000 businesses being able to benefit from that, and the Help to Grow management scheme, which effectively a mini MBA that sits alongside your time at work to help you introduce structured management techniques, build a customized growth plan, and really, as I say, boost your productivity.
Yeah, it's interesting. You mentioned productivity. I was gonna come on to that. The UK, in a lot of measures, has consistently lagged behind sort of counterparts in the developed world. Why do you think that is, and what can be done about it?
Well, I think in broader sense, there's things like investment and research and development. There's also issues around wider infrastructure, which we're seeking to develop through our Levelling Up program and the Levelling Up Fund, so that improving transport, for example, to make people more productive during their working day and travelling around parts of the country. But it very much comes down to work practices and work methods, and that's why those Help to Grow projects, the digital and management, both have a real key component in boosting our productivity.
You've mentioned before, sort of many of our listeners are chartered accountants working either in small businesses or advising small businesses. What can they do to help them get through this next phase of the pandemic?
Well, I think, again, it's making sure that chartered accountants will, by nature, understand access to finance and be able to see the range, because it's about the diversity of finance, not necessarily just going to one of the big banks and looking for a loan. It's are there any CDFIs and that can get involved, different types of structures, but also just making those businesses aware of what's out there. I talked about the Help to Grow management, which clearly can benefit some chartered accountants themselves, but obviously just being able to spread that knowledge through and encouraging some of the accountants' clients to apply for that will be good for both sides.
Along with sort of training small business leaders and sort of encouraging them perhaps to be more entrepreneurial, are we likely to see a bit more breathing space alongside there in terms of sort of targeted support for vulnerable sectors, etc.?
Yeah, I think one of the things we're trying to do, for example, is help. Look at some of the hospitality sector, for example. We've given an extra 50% off our business rates for the next year because we're trying to smooth those cliff edges. We're working with the Department of Work and Pensions to see that the record amount of vacancies are matched up with people that either aren't working at the moment or want to work more hours, so that we can get some of those vacancies filled. A number of businesses are either working at restricted hours or restricted menus and these kind of things in terms of restaurants and some pubs. And we want to help them make sure that they can make the most of the recovery without one arm tied behind the back, if it were.
Sure. We've obviously just had the climate conference, which has covered a vast sweep of reforms or sort of intended reforms, as it were. I think what we hear from small businesses is that that tends to sort of focus on the more corporate end of business scale, as it were, in terms of how small businesses can do their part to sort of tackle the climate crisis. How do you think they might sort of start to approach this, and how can the government help them?
Yeah, I think everybody needs to play their part. So small businesses as well as big businesses, local government as well as national government, individuals as well as communities. And I think if they go to businessclimatehub.org.uk, they can start to see some of the small steps that they can take, those first steps on that journey. Some of it is about benchmarking. Some of it is about actually working out what your practices are now, what impact that's having on the environment, and importantly, what can you do to change things that will be beneficial to the environment and be beneficial to your bottom line. Despite what the media is saying, not everything costs a vast amount of money to do the right thing for the planet, do the right thing for a local area. It might be changing to LEDs, it might be turning the thermostats down, but it might be improved use of technology which can reduce energy use and other such issues there, which will ultimately have a saving for the business, not just a big cost.
Thank you very much, Minister. You can get more information on the government's Help to Grow scheme in the show notes to this podcast, or you can key in Help to Grow into your search engine of choice. With the resolutions from the COP26 climate conference fresh in our minds, in particular the need to turn rhetoric into action, the requirement for climate and sustainability information has never been greater. As the old maxim goes, what can be measured can be managed. In that vein, let's turn to moves to provide global financial markets with better quality climate disclosures and information on other sustainability issues. The IFRS Foundation has announced the formation of the International Sustainability Standards Board, or ISSB. And joining us to help unpack some of the detail around this is Sarah Dunn, Technical Manager Financial Reporting at ICAEW. Hi, Sarah.
Hello.
So, Sarah, can we start by asking why sustainability standards are needed?
So I think at the very core of this is the fact that there's a real demand from investors and from other stakeholders for high quality information on sustainability matters from companies. And the reason for that is they really want to understand how sustainable a business is, but also it then helps them to make informed decisions about how they invest in those companies. But what we have at the moment is a very fragmented landscape when it comes to sustainability reporting. There are lots of different frameworks and initiatives, and that makes it very confusing. So it's confusing for companies because obviously they have to go and look at all those various different initiatives and frameworks and think about which one or ones they might want to report under. But it's also very confusing then for investors because they're looking at companies and information produced by companies, and they're all reporting under different frameworks, so it becomes difficult to make comparisons, and they're not sure if there's perhaps gaps in that information. So having an international set of sustainability reporting standards really solves some of those problems, because obviously companies can go and they know they can look at a single set of standards, but also then it's helpful for investors because they know that companies are reporting under a single set of standards, and that helps drive quality and also improves comparability and consistency of the information that's been disclosed.
How does the announcement about the ISSB move the conversation about international sustainability standards along?
Well, I think it's just a real sign that we're starting to see consolidation of sustainability reporting. And also it's a real marked step towards the ultimate goal of having a global baseline for sustainability reporting. And we're seeing that in a number of ways. So we know from recent announcements that some of the two leading sustainability disclosure organisations, the Climate Disclosure Standards Board and the Value Reporting Foundation, have both announced that they will be consolidating with the ISSB in 2022. But also we know that the ISSB is not planning to reinvent the wheel when it comes to sustainability reporting. They are going to look at relevant initiatives and frameworks that exist already, and they're going to be drawing on those frameworks to have a platform or a foundation for building their own standards, which would be called IFRS Sustainability Disclosure Standards. Earlier in the year, the IFRS Foundation set up a technical readiness working group, and that group comprised of a number of international organisations, but also several leading sustainability disclosure organisations and groups, for example, the Task Force for Climate-Related Financial Disclosures, or the TCFD. And that group essentially looked at their existing initiatives and frameworks and expertise, and they brought that together to think about what would you expect to see or want to see within an international standard on climate-related matters and also on general presentation of sustainability disclosures. So essentially work has already happened and taken place to look at what's already in the marketplace and bring that together to help produce a single set of international sustainability reporting standards.
Digging down a little bit into the detail, what topics will be covered by the standards?
Well, I think it's still probably a bit too early to know the exact detail of what all the individual standards will relate to. But what we do know is that the ISSB intends to produce a suite of standards that covers a broad range of sustainability matters. Ultimately, we expect to see some type of agenda consultation in the near future, and that will be for the ISSB to be asking stakeholders what they want to see within that suite of standards and what the priorities should be in terms of how they approach those the development of the new standards. That said, we do know that the ISSB is prioritising the production of a standard on climate-related matters and also to produce a standard around the general presentation of sustainability disclosures. And they'll be drawing on the work of that technical readiness working group, which has been in existence prior to the establishment of the ISSB.
What's still to come then? What's the timetable around this?
So the ISSB is still to appoint a chair and a vice chair, and it also needs to appoint some additional members of its board. But as soon as it's done that, then we can expect the ISSB to really start work on producing those draft standards. We don't have a clear timetable yet as to when we'd expect to see draft standards or final standards. But as I've mentioned, we do know that the ISSB wants to prioritise a standard on climate-related matters and on presentation of sustainability disclosures We know those are key priority areas for the new board. So I think realistically we can expect to see some draft standards issued in 2022. Obviously they'll be subject to public consultation, and the ISSB will then need to review the feedback, and it'll have to go through a period of due process. So without knowing the exact details, I think we can expect to see draft standards being issued next year, and then final standards possibly next year or the year after.
Interesting. So obviously details are still relatively scarce at this stage, but do we have a rough idea who the new standards will apply to?
Again, probably a bit too early to know for sure exactly who they'll apply to. In terms of jurisdictions, it will be up to them to decide if and how they bring in the new standards into their local legislation, and also to consider what types of company they might want to be reporting under the new standards. But what we do know is that there is widespread international support for the RFS Foundations project and setting up the ISSB. And in particular, we know that the UK government is very supportive of the ISSB and have stated strong support for the ISSB and the production of their standards, and have also stated that the standards would form a core part of their own plans to produce an integrated sustainability disclosures regime in the UK.
And perhaps most importantly, where can ICAEW members go to find out more?
I think in terms of finding out more about the ISSB, I would definitely recommend going to our non-financial reporting hub, which you can find at icaew.com/NFR. And on that hub, we have a frequently asked questions page, and that just sets out some of the backgrounds behind the ISSB, but also looks at how the plans and developments from the ISSB will interact with UK developments, but also other developments around the globe, including in the EU.
Thank you very much for your time, Sarah. And for more information on climate, sustainability and other non-financial disclosure content, check the show notes to this podcast and subscribe to the ICAEW Insights daily email. Joining us as usual on the ICAEW Insights podcast to run through some of the top tax stories making the headlines is Tax Faculty's technical editor, Lindsey Wicks. Hi, Lindsey.
Hi, Tom. Thanks for having me back again.
Always a pleasure. So this is our first podcast since the budget last month and the publication of Finance Bill number 2, 2021-22. Could you briefly talk us through a couple of the key pieces of draft legislation or measures we've seen?
Of course, the budget speech itself didn't mention two key things that the tax faculty have been making representations on, and those are basis period reform and notification of uncertain tax treatments. But both of these were hidden in the documents that were released after the budget. So, as a reminder, basis period reform will affect businesses subject to income tax, so the self-employed and partnerships. And what is proposed is a move away from taxing profits to an accounting date in a tax year to taxing profits arising in the tax year regardless of the accounting year-end date. ICAEW had called for basis period reform to be dropped. This is because, in ICAEW's view, it causes as many issues as it solves. But the budget confirmed that basis period reform will be going ahead, but a year later from 2024, with the transition year being in 2023. One positive change is a change to the measure of profit. So when the transition happens, everything between the previous tax year end and the 5th of April 2024 will be taxed in that transition year. And ICAEW's concern was that profits don't just affect the amount of income tax people pay. Profits are also used for things like the high income child benefit charge, pension contributions and the withdrawal of the tapering of the pension annual allowance and things like that. However, it's been confirmed that those other measures won't be affected by this additional transitional year profit. The big problem remains for those businesses who can't change their accounting date, and there will be an amount of estimation introduced into the tax system for them. And that's because they're going to have to apportion two sets of accounts over one tax year. Now, one accounting date will have finished by the end of that tax year, but the next one won't. And by the time they need to finalise their tax return, they might not have got to the end of the next accounting year. So the amount of estimation in the tax system is going to cause a real issue for those businesses. Moving on to the notification of uncertain tax treatments. Now, this is a measure that will affect large businesses with either turnover of more than 200 million per annum or a balance sheet total of more than £2 billion. And if they've got an uncertainty in their tax return, then they'll need to notify that when they file their tax return. So the tax returns which it applies to are corporation tax, VAT, business income tax and PAYE, and these are returns that are due to be filed on or after 1st of April 2022. There's been a lot of consultation around this. So prior to the budget, there'd been 2 rounds of consultation, plus some draft legislation and guidance were issued in the summer. Looking at the draft legislation and guidance, ICAEW acknowledged that HMRC had been listening to the feedback, but we were still concerned that the rules weren't simple enough to understand. At the budget, they announced a further change. So we were down to 3 criteria in the draft legislation. One of those won't apply from April 2022. And that criteria was that there's a substantial possibility that a tribunal or court would find that the taxpayer's position to be incorrect in material respects. However, they're going to keep that under review, so it might come back in the future. The 2 remaining criteria where these businesses will have to notify an uncertainty is where there's a provision that's been made in the accounts for the uncertainty, or that the tax treatment applied is not in accordance with HMRC's known position. Now, the first one has the potential to give rise to quite a lot of notifications that HMRC doesn't necessarily want, because it's a business will have to account for or make a provision for an uncertainty around transfer pricing, for example. Now, that's going to be subject to disclosures around transfer pricing anyway, so they're going to effectively be making a notification again under these rules, which seems a bit bizarre. And it's not always possible to establish HMRC's known position on the second one, so there's still a lot of uncertainty around what is uncertain.
Goodness, I get the feeling this is far from the last we've heard on both basis period reform and the uncertain tax treatment rules, so thank you for that. Away from the budget and finance bill, as reported on ICAEW Insights, HMRC has undertaken to clear its backlog of self-assessment registrations by the end of December, and it's published a statement on delays to all correspondence. Let's start with the self-assessment point. If self-assessment registration is delayed, is there anything taxpayers can do?
Yeah, well, the first one's a preemptive one, and that's if you still need to register for self-assessment. Online applications are being processed within 10 working days, so that's the preferred method for registering. If somebody's been in self-assessment previously as well, it's also really easy for them to reactivate their account by phoning HMRC. So those are 2 sort of proactive ways of registering fairly simply, so that you don't get caught up in this postal backlog. ICAEW understands that HMRC hopes to clear the backlog by the end of December, but if people still haven't had their self-assessment unique taxpayer reference by that time, then they might be worried about being able to file in time by the end of January, and also whether or not they're going to be able to make their payment in time. Now, the key one is actually making the payment, because penalties for late filing shouldn't apply in this circumstance, provided that registration was in place and you've normally got 3 months from your notice to file to actually file your tax return. So late filing penalties shouldn't be an issue. But payment is another regime, so you could have interest and penalties if you haven't actually paid your tax by the end of January. So if you haven't got a unique taxpayer reference, you can still make a payment by post against a national insurance number, and the payment has to be by cheque. You can't pay at a bank or use online banking for this method. So if people are looking for details, then they need to look in Insights and look for the story, how to pay your self-assessment liabilities without UTR.
We'll pop the link to that article in the show notes to the podcast. Along with self-assessment, are there any other areas that this issue has been affecting?
There are. Delays are occurring across all HMRC services, but being most acutely felt in corporation tax and income tax repayments. As I've already mentioned, registration for self-assessment, but also registration for VAT, amendments to self-assessment returns, and also applications for agent authorisation using Form 64.8.
What's behind this? What's been causing the delays?
Well, HMRC's got a limited amount of staffing resource, and it's been prioritising the delivery of the COVID-19 support and also EU transition. And it's also had to deal with the challenge of remote working, like all of us. Now, this has caused the postal backlog, and it's now adapting again to people returning to the office. So all of these have added together to cause the backlog in dealing with post.
Hopefully that gets cleared up relatively soon. Staying with HMRC, the tax authority has sent nudge letters encouraging holders of crypto assets such as Bitcoin to consider their capital gains tax position. The world of cryptocurrency is a fast-moving and occasionally confusing place, but before we touch on that, could you briefly remind us what a nudge letter is?
It's a part of behavioural science, so they're used to encourage behaviour that improves the life and well-being of people and society. So they're widely used by government. An example that I can think of last year that I received was a letter encouraging me to get my children vaccinated for flu, given the COVID pandemic, and they were concerned that, winter flu could be confused with COVID. So that letter encouraged me to sign up my children to the school flu vaccination programme. That's an example of a nudge.
Okay, a wide range of uses then. Moving on to the letters from HMRC, who's getting them and what do they say?
So it's UK domiciled individuals are getting the letters, and the letters say that HMRC has information that the person holds or has held investments in crypto assets or cryptocurrency. And it goes on to explain that if they dispose of those assets, then they might have to pay capital gains tax. Now, the thing that might be tripping people up is when they've actually disposed of a crypto asset, because that's the trigger on which tax would be payable. So, first of all, it's if they sell crypto assets for normal currency, so dollars or pounds, and gains will be taxable even if they haven't withdrawn the funds from the crypto asset exchange. And I think that a lot of people think that if they haven't withdrawn the funds, then there's no gain. But actually, if the funds are sat there in currency in the exchange, then they've made a disposal. Another thing that might be tripping people up is exchanging one crypto asset for another. We exchange currency when we go on holiday abroad. People might be thinking that's the same thing. It's not a disposal, but it is. So, that's another point at which they could be crystallising a gain. And also, if they use crypto assets to buy goods or services, then that's also a disposal. So all of these things could be things that are triggering gains that people don't realise that they have to pay tax on them. The letter also explains when you might have to pay capital gains tax. So everyone's got an annual exempt amount, and in 2020-21 that amount was £12,300. That's not just for crypto assets, it's for all disposals of assets that would be chargeable to capital gains tax. So they've got to think about any shares or property they might have disposed of that might have used up that allowance as well. So the other thing that they might have is a loss. They might never have completed a tax return to claim a loss, but if they've had losses in the past, then that might reduce any gains that they've made on crypto assets. So that's something else to consider. So the letter asks taxpayers to review their transactions, and if they've made gains that exceed their annual exempt amount, to tell HMRC. They might need to register for self-assessment to report their gain if it was just last tax year. If it was earlier tax years and they need to make a disclosure, don't just go ahead and disclose to HMRC. Get some advice on what the implications are. So I would recommend that they speak to a tax investigation specialist. And as I've said, they might have some losses that they could claim. And again, they might need to register for self-assessment to do that, and they can actually go back 4 tax years and pick up any losses that they've made there.
Okay, this might be a fairly simple question, but how can HMRC tell who has crypto assets?
Well, at the moment, they would have been getting that from information requests to the crypto asset exchanges. So HMRC would have gone out and asked, who holds the assets, and that's where they would have got their information from. And one thing that we've touched on in a previous podcast is automatic exchange of information. And that is something that could come crypto assets in the future. And people may have heard of DAC 6, that was the big topic at the start of this year. DAC 7 is coming, which is exchange of information for digital platforms. But DAC 8 is intended to potentially cover crypto exchanges and also e-money accounts. So that could be a way that HMRC will get hold of the information in the future.
And what is HMRC's current position on crypto assets?
Well, it's taxed like any other investment, really. HMRC's view is it's not gambling. Gambling isn't taxable, but they see this as being an investment. So people are holding the assets with a view to some kind of capital appreciation. So that would be taxed as a capital gain. And only in exceptional circumstances would it be trading. So if you're trading, then it's subject to income tax. And that really depends on the frequency, the level of organisation and sophistication of your investment, that you trip over the boundary between investing for capital gains and a trade that's subject to income tax. So looking at those people who are, the vast majority where they're in the capital gains tax regime, the accountants out there will remember the pooling rules that apply to shares from when they studied for their exams. And this is where shares of the same type are all pooled together and their costs are pooled together. And the same thing applies to crypto assets. So crypto assets of the same type are all put in a pool. And when you sell some of that, then you take some of the cost out of the pool to calculate your gain.
So the article from ICAEW's tax faculty on these nudge letters mention that they've not been sent to non-UK domiciled individuals. What does that indicate?
Well, the position for non-domiciled individuals is more complicated. So they're still liable in respect of gains arising on assets situated in the UK, but liability in respect of gains situated outside of the UK will depend on whether they're using the remittance basis. HMRC has its views on when crypto assets are situated in the UK or not, and HMRC says that view is unchanged. So I don't think we need to read too much into the fact that these letters aren't going to non-doms at the moment. I think it's just simply that the position for them is slightly more complicated.
Well, thank you very much for that, Lindsey, and for your tax expertise as ever. I'm afraid that's all we have time for today. My thanks to all our guests, Lindsey Wicks, Paul Scully and Sarah Dunn. Thank you very much for listening, and we hope you'll tune in next time.
We hope you enjoyed this episode. If you want to hear more from ICAEW, subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts.